So BASF is reorganizing into two groups of businesses, core and standalone. Inside core, you've got chemicals, materials, industrial solutions, and nutritional and care. Over on the standalone side, surface technologies group of businesses and agricultural solutions. Sizes, core business is about 40.5 billion euros in sales and 4.6 billion in EBITDA. That's just an 11% EBITDA margin. Actually, the standalone businesses are slightly higher margin at 14%. That's 3.5 billion euros in EBITDA out of 25.2 billion euros in sales. The second thing to know is that China's a big deal. They're putting 10 billion euros of capex investment into the Xinjiang Verbund site. That's expected to generate by 2030 $4 to $5 billion in sales and $1 to $1.2 billion of EBITDA. That's a 25% EBITDA margin on that business. That's a huge deal. That amount of EBITDA, putting it into context, is between 22 and 26% of today's total EBITDA generated by those core businesses. Among the products, and there are many of them coming out of Xinjiang, are polyethylene, glycols, ethylene oxide, and a whole range of non-ionic surfactants, about 215,000 tons worth of capacity for non-ionics there at that new Xinjiang site. So focusing in now on nutrition and care, that's about a 7 billion euro sales business, 4.8 billions in care chemicals. So the rest is in nutrition, and care chemicals is where all the surfactants are. Out of that 4.8 billion in care chemicals, we've got 2.5 billion in personal care, 1.3 in HI&I, and 1 in industrials. This is fairly detailed information, which is quite new for BASF. These care chemicals are going to be fully integrated, continue to be fully integrated into the Verbund system, and they're expecting a lot of growth out of Asia. Some interesting historical data on this chart showing you that in the past few years, EBITDA has been kind of bouncing around in that division, but on average, they've been seeing since 2019, $6.7 billion roughly in sales, at 15%, which is reasonably healthy for the corporation. EBITDA margin on that business, and targeting obviously some growth out of that going forward. Like the other core businesses, Care Chemicals is integrated into the Verbund system. This chart's pretty interesting, showing you the high degree of integration, particularly in EO and alkoxylation. They pointed out that they're looking at opportunities to put in bio-naphtha or biogas in at the front end of the value chain for bio-based products, for which they do expect consumers to pay some sort of premium. Some interesting notes on innovation in the care chemicals area. So here we see a chart on the wax dispersions being used as alternatives to microplastics and silicones in personal care and beauty care. And an interesting chart, not directly surfactant related, but a very interesting chart on the product carbon footprint of their petrochemically derived citral versus a natural citral, a bio-based citral, a pretty significant difference there. So I thought that was pretty instructive. So bottom line, look, I've always liked BASF's corporate communications. You should spend time on the website. There's a lot of interesting materials there. But what does this mean for the stock price since the Capital Markets Day? So I take a look at this stock price data from the BASF website, and you can see that there was a kind of a little tick up toward the end of September, towards that last day, September the 27th of the event. But the stock really didn't do much after that, and kind of faded away a bit. And honestly, I am not sure why. I think it's a good plan. I think it's a good strategy. It makes a lot of sense. Obviously, the proof will be in the execution, particularly of that China project. But if anyone can shed the light on the performance of chemical stocks, I would be very interested to learn and share what I learn on this channel. So there we have it, BASF Capital Markets Day. Thank you very much again for listening.